right. Good morning, you magnificent melon heads, you. I hope you guys are doing well on this, it's kind of gloomy Tuesday morning here in the States or wherever you are. Hi, Mom. Hi, Dad. I love you guys. I hope you guys are doing well. So, today is the day. Big tech earnings coming in. Today starts this nutty week. I did a video last night about how that sell-off had kind of bounced right where I said it was going to bounce, right in the middle of that band of this downward channel that it's been in really since the start of the year, and that it's going to live or die, this trend, based on big tech earnings. I mean, we have so much market cap reporting over the next few days, just in the big tech names alone. Alphabet, Microsoft, which are reporting today. All right, I hate saying Alphabet. It's Google. I don't know why they changed their name, but whatever. Google and Microsoft today. Then we've got Facebook, Apple, Amazon. There's one other big tech name in there I think I'm forgetting, but it's something like 8.2 trillion in market cap is all reporting just in the big tech names. That is a full 1/4 of the S&P 500's weighting reports over the next 4 days. Okay, this is a massive amount of data, and the whole market is going to move based on these numbers. All right, so it's going to be a crazy week. Stuff is going to change very fast. It's going to move quickly. We'll see what goes on. If there's anything like, oh my God, in these numbers, maybe I'll do a spontaneous live stream. I don't know, because it's hard when things are moving this fast. It's hard to get a video shot, filmed, researched, edited, and then posted, because things just move too quick. By the time that happens, the information is already a few hours old. So I'm gonna stay on top of this as best I can. And again, look for that spontaneous live stream. If you see that pop up in your feed at some time other than Tuesday morning or Friday, that means there's something interesting going on, and I want to talk about it right now. All right, so we're going to talk a little bit about the two big ones that are reporting today, namely Google and Microsoft. But we've also got oil majors reporting this week. We've also got Visa is reporting this week. Visa is a pretty good indicator of the economy. Americans are living off of their credit cards right now as the price of inflation drives everything up. People are putting that on the cards. All right, that's not a sustainable trend. Hang on a second. I just saw something just popped up on my window here. Did I lose you guys? Do I still have you? I think I still have you. Okay, we're still here. Just had a big error message pop up on my window. That's not unnerving. All right, so what were we talking about? We were talking about the oil majors are also reporting. Visa is reporting. There's a lot of pharmaceutical companies are reporting, all right? I think big pharma earnings are probably going to suck because big pharma's been making buku bucks off of this unfortunate health situation that we've all been living in for the last few years. That's going to go away. So there's a lot of stuff coming in. So far, some of the earnings have surprised a little bit, like American Express posted a pretty good quarter. Not surprising, I guess, because everybody's living on their credit cards. The bank earnings were absolutely garbage. We had Activision Blizzard reported yesterday. Terrible numbers. So video gaming makes sense. People aren't locked in their houses anymore, so they're putting down the controllers. They're playing. They're going outside a little bit more. So it's going to be a crazy week, folks. There's a lot of information coming in. There's going to be a lot to digest. I'm not going to try to trade too much around it. My trades are in place right now, and I'm not going to try to match pace with the algorithms. That's just how you get steamrolled. So, anyways, I see we have someone here. Hello, Mike Bender from Robin RC Models in the Super Chats very early this morning. He says, good morning, Jack. Have some coffee, or have some me coffee. Have some of me coffee. Have some coffee on me. Is that what you meant to say, Mike? Well, sir, thank you very much for the cup of coffee. And thank you very much again for the support of the channel and for the Super Chats. I appreciate that, brother. All right. With that, I think we are going to shrink my big, fat melon of a head. Let's take a look at a couple of things here. I have the VIX up right now. We'll get to the VIX in a minute. Let's just take a look at the indexes. We are 10 minutes from open right now. Looks like the S&P is set to open down about 0.5%, or down 23 points. The Dow, come on. Google's not being very nice today. That's a bad omen for their earnings. Looks like the Dow is down 200 points, or at least the Dow futures looking to open down 200 points. or 0.6%, and the NASDAQ looks to be down about 0.6% or about 80 points. So not looking like a great morning for stocks, although with the kind of moves that the market has been making these last few days, this is actually kind of a tame move. We did have that big reversal yesterday. We'll get into that a little bit. I did a video on that one last night. Looks like gold and silver getting a little bit of a reprieve. Thank God after the last couple of days they've had. Gold's up $11. Silver's up 7 cents. Not much. Crude oil trying to retake that critical $100 threshold. A lot of demand destruction going on in China right now. A lot of ships that aren't moving. That's not good for energy consumption. So it's hard to tell. There's all this geopolitical risk going on in crude oil, and there's a lot of supply disruption happening because oil facilities are being bombed and sabotaged all around the world. We had some kind of attack in a Russian oil field that feeds one of their major pipelines. That was 2 days ago. I don't know if it was sabotage or a missile strike. We've had the thing going on in the UAE, in Saudi Arabia, with the Houthi rebels targeting oil facilities. So there's a lot of production disruption going on, but at the same time, this lockdown in China is just massively, massively destroying demand at the same time. I don't know which trend is going to be the more powerful one in the short term. Well, while we're on oil, let me just point this out. This is the chart of XLE. This is one I've been talking about on this channel. Now, I have been buying call options in XLE for a couple of months now, and as they have been going up and I've been making really good profits on this one, I've been pulling out my cost basis, booking some profits, putting that in cash aside, but then rolling some of those proceeds into future call options. And I've done that 3 or 4 times now. Well, I did get caught flat-footed yesterday because I still have some of my XLE options in play. I have, I believe, their June expiration XLE calls. And right now, this XLE chart just looks flat out broken. Here, let's move my melon down here so you guys can see it a little better. But you can see right here, we have dipped below this trend line, below the 50-day moving average, and we closed below that yesterday. So if this chart does not retake that 50-day moving average in a hurry, it doesn't bode well for the energy stocks. Now, XLE is made up, about a quarter of the XLE is Chevron, about a quarter is ExxonMobil, and then the other half is a mix of ConocoPhillips, Marathon, your oil services, and your exploration companies. So this is a cross-section of the oil industry stocks. This is not a commodity ETF, but it does tend to track the underlying commodity. So a lot of these companies are reporting this week. They're probably going to report really good quarters, and they're probably going to forecast really good quarters. But again, right now this chart looks broken. So I'm still holding some XLE calls, but I am not terribly enthusiastic about this one right now, especially with what's going on in China. So we're going to keep an eye on what's going on in oil markets. Okie dokie. Now, let's get to the meat and potatoes of what I wanted to talk about, which was the big tech earnings today. Leading off, we have Microsoft this week. All right, here's Microsoft. This is a one-year chart of Microsoft we're looking at right now. Just terrible looking head and shoulders pattern right there. Down big this year. Peaked, I guess it peaked in November at around 343. We are all the way down at 280 right now. So big decline for Microsoft. Now, I actually don't think Microsoft is going to report that bad of a quarter. I mean, of all the big tech names, I think Microsoft probably has the best chance of reporting decent numbers because Microsoft doesn't get much of its earnings, if any, that I'm aware of, from advertising. Advertising spend is way down in the United States right now. All right, so that's important. Anybody who runs a YouTube channel with ads on it probably knows that advertising spend in the U.S. is down right now. So that doesn't fare so well for Google, but I don't think Microsoft is going to be affected by that. Now, Microsoft will be affected by the slowdown in gaming. We saw Activision Blizzard, the company Microsoft is about to buy. They posted lousy quarters. Gaming revenue is down significantly. Cloud computing revenue probably down year over year because remember, a year ago, we were in like peak lockdown mode. The cloud services were really where it was at back then. Right now, probably not so much. Anyways, I just wanted to break it down. I found this on Investopedia. This is a breakdown of Microsoft by business segments, where their revenue and their earnings come from. Let me zoom in a little bit so you guys can see better. This first pie chart here, this is their revenue segment. They get about 31% from productivity and business processes, right? That's your Windows, that's your Microsoft Office suite. It's about a little less than a third of their revenue. A little more than a third of their revenue comes from cloud computing. That segment may not come in so good, whereas productivity and business processes probably be flat on the year. And then here, more personal computing, 34%. That is all of their hardware. That's their Surface devices. That's their gaming segment. That's just over a third of their revenue also. That segment probably not going to come in so well. All right, so those three segments, that's where Microsoft makes their money. But again, of all the big tech companies, I think Microsoft probably has the best chance of posting a good quarter. Now let's get on to one that probably has, in my opinion, very little chance of posting a good quarter, and that is Alphabet, parent company of Google. Again, similar chart to Microsoft, peaked in mid-November at almost $3,000, now down here at $2,465. Looks like this chart has rolled over, and I said it in, I think it was January. I did my video after a Netflix earnings call. I said that the era of big tech was over and that there was this cyclical rotation into value was happening. That trend has continued. We'll see what happens with these earnings, but I don't anticipate any good things for Alphabet later on today. This chart I did not find very helpful at all. This is on Investopedia of where Google or Alphabet gets their revenue and their income from. Almost all, 92% of their revenue comes from services. That's Google Maps, that's Google Play, search, all right? That's advertising, all right? Almost all of their revenue comes from advertising. About 7% of their revenue comes from their cloud business. But their cloud business does not make money, so 100% of their earnings comes from advertising revenue, all right? So Google is an advertising company. Right now, U.S. ad spend is way down, all right? And, hey, I run this YouTube channel, so this YouTube channel makes money based on Google ad spend. And I can tell you, earnings are down for Google, all right? Anybody with a YouTube channel will tell you the payout per 1,000 views has gone down significantly since the fourth quarter. All right, so Google, I do not expect a good quarter from this company. I expect pretty bad numbers coming from Alphabet, all right? And the same is going to happen later this week when Facebook reports, because Facebook is another advertising company. I don't expect very good numbers from Facebook. All right, that leaves, who are the other big tech names that I'm for? Netflix already posted just an absolutely horrendous quarter. Apple is interesting. Apple kind of lives or dies by China sales right now because that's where Apple has gotten all of its growth from in these last few years, and I don't think there's going to be any growth in China. You've got a lot of anti-American sentiment is taking hold in China, especially as the governments around the world bang on the war drums. That doesn't help. At the same time, you've got the real estate collapse going on in China and the wealth effect on consumers. When people's homes are not going up in value, they don't feel as wealthy, so they're less likely to spend on luxury goods. That's going to hurt Apple's earnings. And on top of that, you've got this ridiculous lockdown that's going on in China right now. People can't go out and buy iPhones if they're locked in their freaking apartments. They also can't go out and buy food and any other things. And even if they do manage to get out, they're not going to the Apple store. I can tell you that. So I don't see a lot of good things from Apple either. So long story short, I'm expecting some pretty much across the board bad numbers from big tech. All right, now Microsoft may be the silver lining in that cloud. Again, this is just my opinion here. I have no position short or long in any of these companies. Let me just say that. But I just don't see a lot of good growth drivers, a lot of good things on the horizon for any of these companies right now. And again, I see a lot of this being rolled over, a lot of the age of big tech, which has dominated the last, 15 years of investing. I think it's over. I really do. Anyways, we are now 1 minute away from open. Let's see what the futures say for us real quick. The S&P looks like still down 0.6%. NASDAQ still down 88 points or 0.65%. And the Dow now down 224 or 0.66. So it looks like market's still selling off a little bit in the open. Crude oil is back over 100. Gold is up over 1900 again. And silver is up a nickel. Not a lot going on. And the 10-year Treasury is at 2.74%. Okay. With that, let's take a look at commodities, because I mentioned in my video yesterday that I was a little less excited about commodities after these last few days. but that I remained very much bullish on agricultural commodities. All right, well, right on cue, looks like everything is green across the board today. Gold, silver, base metals, energy. We got aluminum is the one little red blip in a sea of green right now. And of course, all the agricultural commodities are up. Corn futures back over 800. Again, my commodity position right now with this uncertainty in China, I just do not know what is going on in that country, why they're doing it. All right, it can't be about Omicron, right? I mean, almost everybody got Omicron, right? I got it. Everybody in my family got it. It was a nasty head cold that left me feeling like garbage for about a week. I was really like just weak and tired for really close to a month after I had it. But the actual thing itself was not bad. It really wasn't. It was a cold. So what's going on in that country? It doesn't pass the sniff test. All right, what's going on? I've heard theories that it has to do with Xi Jinping trying to get, it's not re-election. What is it? Reappointed by the Communist Party as the premier, and that this may have something to do with Xi Jinping shoring up power. I've heard people say it's backdoor economic sanctions on the United States, and they're waging economic warfare on us. That's possible. It could be that they're just anticipating widespread civil unrest because the real estate collapse and the economy is about to collapse. So they're turning everybody into prisoners and pre-positioning the military. I don't know what is going on. I don't understand it, right? Like someone like me looking in at what's going on in China, where personal freedom matters so much to me, and what's happening there, it just goes so against my core beliefs that I guess I just lack the imagination required to understand what's going on there. I mean, I'm trying to be aware of my own limitations here. I don't know what they're thinking. All right. I do know it's bad. All right. It's not coming from a good place. It's not coming from good intentions, and it's not going to be good for anybody in the world. All right. It's going to kill commodity demand. It's going to kill energy demand. It's going to kill base metal demand. It won't affect food demand, and that's why I remain very optimistic about wheat and corn, not so much soybeans. All right, I think the U.S. is going to plant a lot more soybeans this year than they did last year, and we could actually see a glut in the soybean market even as other food commodities are running short. So we'll keep an eye on that one. I see Miracle Oil. Thank you very much for the super. She says, do you believe Amazon and Roku puts will work out? Amazon is the one I didn't talk about. Okay. Roku is already down pretty hard on the Netflix earnings. So some of Roku's, what I expect will be an awful quarter, is already priced in to that one. So you could have, if the news from Roku is just a little bad, and I think it's going to be bad. I don't know if it's going to be a bloodbath like Netflix was, or if it'll just be a little bad. You could have more negativity built into that price right now. So if the news doesn't come in terrible, Roku could bounce a little bit, right? Almost a buy the news. If you're expecting bad news, it would be a buy the news scenario. That one's hard to say. The time to buy puts in Roku was before Netflix reported. Let's just put it that way. Amazon is interesting because I think people are underestimating just how bad Amazon's quarter could be. The last quarter, Amazon reported record earnings, and it was because of their stake in Rivian had gone up so much in value off of the IPO and that deal that they made for electric vehicles. Well, all that is gone now because Rivian is in the toilet. And I've heard estimates that Amazon could lose as much as $10 billion on their Rivian stake. So Amazon looks set to report the worst quarter they have ever reported by a huge margin, and I don't think the market has priced that in yet. All right. Now, that said, Amazon puts are wildly, wildly expensive. And, zoom way out on an Amazon chart, go back 10, 15 years, right? Shorting a chart like that, that's a brave move. All right. So that's not a trade I am even remotely interested in from my standpoint. Do I think Amazon's going to report a good quarter? No. No, I don't. Would I personally short it with my money? No. No, I would not. So, it's tough to look at a chart like that, right? That's like standing in front of a locomotive that's steaming towards you and betting it's going to stop, right? If it doesn't, you're going to get rolled over. So that one, shorten that one directly is just not for me. That's too rich for my blood. But thank you very much, Miracle Oil. I appreciate the super chat and the support of the channel very much so. All right, it is now 9:35. Markets are open. Let's see what we've got. S&P is now down 30 points or 0.7%. Looks like a little bit more sell-off going on. Dow down 185, maybe catching a bounce. NASDAQ down 156 or 1.2%. Looks like the NASDAQ may be looking to sell off into big tech earnings today. That is interesting. We'll keep an eye on that one. Oil back below 100. Gold and silver hanging on to their very meager gains for the day. Okay, we talked about the big tech. We got crude, XLE. Okay, I did make, back on the energy trade, I did make one trade yesterday. I sold my LNG. This is one I've been following quite a bit on this channel. I had mentioned last week that I was starting to get a little nervous about this one. Number one, I had just made fantastic returns on this one. I bought it in the high 60s originally. I've been trading around a core position, so my cost basis was up into the mid 90s when I sold it. But I saw that we had broken below this upward channel that we were in. I saw the arbitrage between European gas and U.S. gas starting to get compressed as U.S. gas was rising and European gas hadn't really done anything for the last month. And then I saw that we broke below this channel, and we just had a big breakdown last week with the sell-off, now down below the 50-day moving average. I was up so much on this one, and I've been in cash raising mode. I just decided it was time to pull the trigger on this one. I may have left some money on the table when I sold this one. I don't know. I still believe in the long-term macroeconomic play here. I may end up buying back into this if this sell-off does continue to gain steam, and I see this dip back, down below, say, 120. I may consider buying back into this one because I think Europe doesn't have much choice but to pay a lot of money for American LNG for the foreseeable future. They have painted themselves into a corner with their idiotic energy policy. That said, the overall market dynamics I see in play right now, combined with this chart breaking down, just told me, you know what, take your profits and step back from this one for a little while. So I sold my LNG yesterday, kind of along the same line with XLE. I'm just less excited about the energy trade in the short term because I don't know what's going on in China right now. Another one that I still have in play that I am still 100% bullish on is corn, and that has to do with this fertilizer situation. And again, the price of fertilizer is still not reflected in the price of corn. I just want to emphasize that, folks. This is still a Ukraine trade, right? This is still a Russia invading Ukraine, the war. Almost all of these runs, all of this big run here started with the buildup of troops in Ukraine. This has nothing to do with less fertilizer application resulting in lower crop yields for the year. And I don't see any new fertilizer plants being built right now. I don't see any new exploration for natural gas happening right now. So I don't think this is just a 2022 problem. I really don't. If we were to start now, like globally unifying behind this issue of the fertilizer shortage and what it's going to do to the food supply, I think maybe we might get there in time to do something about 2023. Probably not. So I think this is a multi-year problem, and it is not even begun to reflect in the price of corn. Now we've got a late planting season in the U.S. It's been cold and it's been wet in the Corn Belt. Out here in rural PA where I live, the fields have not even been turned over yet. They haven't plowed. They haven't planted. So we're not terribly late in the planting season right now. But if this goes on for more than another week or so, that is gonna cause lower crop yields. And then I did a video with Sage from Sage News Live, and we talked about how fertilizer isn't going to be shipping by rail anymore because Union Pacific said, we have to cut 20% of our fertilizer shipments to CF Industries, I think it was. So the corn trade is just getting started. And again, food demand, it's inelastic. Doesn't matter what big governments do, people still have to eat. And then combine with that the fact that food exporting countries are starting to hoard and implement price controls to try to suppress their own food prices. That's going to cause an illiquid export market, which could just drive food prices through the roof, absolutely through the roof. And when you look at trends in fertilizer, here is, this is Progressive Farmer, DTN. I've been looking at this one. This is a 6-day-old article, but it says phosphate prices reach all-time high in leading fertilizer market. So, leading fertilizer markets higher. Fertilizer prices are still going up. They haven't even stopped the trend of prices rising yet, let alone have them come down. Look at this chart down here. Let me zoom in on a little bit. The purple line, that was your fertilizer prices in 2020. The green line was your fertilizer prices through 2021. And then here's the red line, your fertilizer prices right now. I mean, look at where we are compared to where we were. This is for DAP, or diammonium phosphate. We're trading at over $1,000 a ton right now, where for most of 2020, we were trading below $400 a ton. Right? That's next year's food getting more expensive. I've been saying it since October, right? This is gonna starve people to death. And our leaders are still talking about unicorns and rainbows and solar panels and fighting over who gets to use what bathrooms or who gets to swim in what event. Nobody's paying attention to the fact that millions of people are facing starvation if we don't arrest this trend. Nobody's doing anything about it, all right? Team Thanos is winning this one, folks. Just want to throw that out there. So this is going to keep getting worse. And if you look at this article, it goes on, and it lists all these prices for urea and potash and these various combinations. And almost every single one of these fertilizers is at an all-time high again, week after week, all-time high. This trend is not even begun to slow down. All right, so the corn trade, the wheat trade, I remain 100% bullish on those. It doesn't matter what the governments do about it. They can't lock people in their houses and then all of a sudden those people don't need to be fed anymore. This one's going to get ugly. I'm not going to lie. I don't see a lot of good coming out of this story. Anyways, sorry about that. Again, folks, if you've been watching this channel, I've said it for a number of weeks now. You see it coming. We all see it coming. If you're watching this channel, you see these food prices going higher. Don't sit around and wait for the shelves to go bare. Get yourself a supply of emergency food. Get some non-perishable stuff. Have a stash. By the time the average person wakes up to this trend, it will be too late. And let me just tell you, I have tried to talk to a lot of friends and a lot of family about this issue. I've tried to bring it up. I've tried to show them the charts and to talk about why it's happening and where it's coming from and where it's going and what this looks like down the line. People don't want to hear it. All right. Even when handed this information on a silver platter, when somebody else does the research and goes out and finds them for it and polishes it up and shows it to them in very easy to understand information, they don't want to know about it. They just don't want to know about it. They want to go on with their lives. They just want to worry about what's going on in their immediate little sphere, and they don't want any of that stuff to come in until it's too late, until the shelves at the supermarket are empty, or until the prices at the supermarket exceed their paycheck. Then everybody will be screaming, how could they let this happen? So if you're watching this channel, you don't have that excuse. You've seen it coming. We've been talking about it. I know a lot of you guys have mentioned that you're taking steps to prepare yourselves, and good on you for that. Keep it up, because this trend is not even slowing down. All right, it is now 9:44, and I have been on my soapbox for nearly a half hour. Let's take one last trip through the indexes and see what we got going on today. The S&P picking up steam, now down 39 points, or just under 1%. The Dow is down almost 300 points now, or 0.88%, and the NASDAQ leading the way lower, down 1.4%, or 184 points. So, again, it looks like if I had to bet in the next couple of days, I would say the NASDAQ leads us lower in a big way, but also the S&P, because remember, these big tech names make up a quarter of the S&P. But the S&P may not sell off quite as hard, because I think the oil majors could come in and report good quarters, and that may alleviate some of that selling pressure. But again, folks, there is just so much data is going to be reported in the next few days, so much market cap. These companies are so ridiculously big that it's going to be interesting. It's going to be fireworks. Let's put it that way. And keep your eyes peeled if you get that notification that Nobody Special has gone live unannounced and it's not Friday afternoon. That means something big has happened, and I wanted to talk about it right away. So with that, I think we are going to call this one, folks. I want to thank you guys for watching. Thank you to all my Patreon supporters. I appreciate you guys and everything you did for the channel. There's a link to that in the description down below. Also, thank you to everybody who sent me super chats. I appreciate that. And until next time, live small and dream big.